This is Mike Paulenoff, MPTrader.com, January 31st, 2010. This is the fourth installment in this Sunday's Charts of the Week video update series. Let's do Bank of America next, BAC. Widely held, huge financial institution. One of a group of major financial institutions in the United States that's deemed too big to fail, that would pose systemic risk, and which have been the object and the target of the Obama administration's desire to impose an insurance tax just in case, or I should say for the privilege of the safety net associated with too big to fail. That is, just in case the administration or the government has to bail out the banks again in event of another financial crisis. In any case, regardless of the merits of the program, regardless of the politics, on and on, all I care about for this purposes of this update is the chart. So what we're looking at is a daily chart of Bank of America, and let's notice that Bank of America peaked at 1910 on October 15th. Now, the rest of the market, for the most part, the averages peaked in January. The financial sector and Bank of America peaked in October. And since, Bank of America has been trading in a contractionary range, down to 1412, up to a lower high at 1718, down to a higher low of 1468. Let's also notice that the 200-day moving average is at the top of the arrow, which happens to be at 1460. And the 50-day moving average, which is the green line here, is at 1590. So really, even though we have a contractionary range, what we see now is possibly a range inside of a range between, say, 16 and 1460. The cap of the range being where the 50-day and even the 20-day are moving sideways and may turn lower, juxtaposed against the 200-day, which is 1460. From my perspective, either this contractionary range is a high-level bullish consolidation ahead of a big breakout, or alternatively, it is a high-level topping type of pattern that could put into progress a significant downside correction. Now, because January is such a devastating down move for the market, and because the market, from my other work, appears vulnerable, I need to look at Bank of America as being vulnerable to breaking its 200-day. If that's the case, where can it go on the downside? Well, first we have to deal with the swing move, the potential swing move off of the original high. So if we're talking about a swing move of about $5, this distance between the October-November down move, then the measured move off of that is approximately $5, which would take the Bank of America down to around $12. And if support came in at $12, then we could make the case, perhaps, that an equidistant swing correction had ended. But still, that implies a move of $3 to the downside from where we closed on Friday. Where else could we go? Where else could Bank of America go in a correction? And could it be worse than that? Yes, it could. So let's go over and condense the chart. So we have a big picture of the entire up move off of the February low at 253 to the October high. Here's the contractionary range. If in fact the 200-day breaks and you get a significant decline, if it breaks a Fibonacci retracement of 38% would get you to about 1280, okay, which would be higher than the swing target of $12 to $12.10. The second objective above the 38% retracement at 1280 would be the swing target at 1210. The third retracement would be a 50% retracement of this entire up move. The 50% retracement Fibonacci area would be 1088. So I don't know what to expect precisely just yet for Bank of America, but I know a couple of things. One is that the down move so far has been confirmed. Number two is that there's a lot of pressure on the 200-day, which bothers me, and which if I was a holder of a long holder of Bank of America, I'd be concerned that a break of the 200-day would unleash a fairly big percentage move. Let's keep in mind that along the continuum of these objectives, you have the potential to have a decline of between 14% and 20% from current levels. If Bank of America breaks the 200-day and moves to either the 1280 level or the $12 level or the 1090 level. So Bank of America is dangerous here. If it breaks the 200-day and there's downside follow through, look out below.